We had a decent bounce back in the stock market today. However, we did have a miniature sell-off into the close. We still closed up over 1%, which actually makes this the fourth straight 1% move, either up or down. The last time we've had 4 straight sessions like that was all the way back in November of last year, so it's fairly rare. So we'll take a look at that and see what it means for our posture. We did have one of our indices flip back to a bullish posture, so we'll discuss that. And then we'll get into our trade application example, where I wanted to focus on a healthcare company that got a recent government contract that's setting up for a decent bounce higher opportunity. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's October 5th, 2021. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below and check out our email distribution list so that way you can be notified whenever these videos get posted. We'll also let you know which stocks are giving you overbought and oversold cluster signals within the S&P 500 within those emails. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ, and I really appreciate those of you that click like and retweet on the Market Outlook posts there that we have on Twitter. And then last but not least, we also have a presence on Facebook. Yes, the currently controversial Facebook. For those of you that are on that particular social media platform, feel free to check out our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you guys are aware, I tend to bring up chart 6D whenever we have at least a 1% move up or down. And today was one of the good variety, up to the upside, at least if you're bullish, just barely finishing up above 1%. It was 1.05% on the S&P 500. However, be aware that we did not close at the high of the session, so we had a little bit of wet blanket thrown at the end of the session there. At one point, we were up 1.5% here today, so we gave back about 0.5% there in the last half hour or so. Nonetheless, that was, as I mentioned in the intro, our fourth straight 1% move. And so today, represented by this green bar you see right here, going up and over this blue bar, tells us that we do have a 1% move. Yesterday, the red bar went down below the lower blue bar, telling us that we had a negative 1% move. The day before that, a green bar above the blue, a positive 1% move. And then the day before that, a red bar down below that lower blue, telling us that we had a minus 1% or more day. So you can see that that's 4 days in a row. And we've had a few more volatile sessions here recently. As you can see, they're kind of starting to get clustered together in terms of how much those spikes are occurring, either the green ones to the upside or the red ones to the downside. And you'd have to go all the way back here to November of last year, so nearly a year since the last time that you had 4 days in a row of at least 1% moves. We actually ended up having, I think, 7 back then. So that was particularly volatile, and many of you probably don't even remember during that time, just like we probably won't remember this time, let's say in a year from at this moment in time either. These things tend to be forgotten, but you can see back here in November that we did have a really sharp sell-off day there on October 28th, where we were down over 3% on the S&P 500. We were then followed by a 1% up day the next day, and then we had a bit of a head fake, or at least that's the way it was setting up, as the market then went down another 1% the day after that. But then we had 4 straight days after that of 1% moves. In fact, one of them was a 2% move along the way. So that was that move that you see right up there, where it looked like we were starting to slip, right? Kind of feels a bit the same as we are right now here in October once again. Remember, Septembers and Octobers can feel a little bit alarming to those of you that might be newer. From a seasonality perspective, we tend to have a little bit more chop and slop and a little bit more difficulty making progress. So it kind of looked like we were going to fall off the map as October was closing its books last year, and then we were greeted with 4 straight up moves of at least 1% to kind of click us in to our current upward trajectory, where we've now gone up about 30% in the last year. So that's despite the 5% pullback that we've had along the way. So again, reminder that is your entry fee to get into the stock market, and the rewards that are possible there is that you have to assume the absorption of risk. Those that are willing to think long term look towards these moments in time as opportunities, as I was explaining to my dividend growth investing class earlier today, when we tried to focus on the technology sector to look for some beaten up merchandise that might fit the type of thing that we would be looking for as long-term investors. And similar to what I just posted on Twitter a moment ago, where the Forbes 400 list of richest Americans was just issued. And once again, it was led by long-term business owners, not hour-by-hour day traders. And so for those of you that are willing to think in long terms and you're not trying to get rich overnight, then these opportunities where the stock market does pull back tend to be viewed as a wealth building situation longer term. It's just a matter of whether you're willing to take advantage of that or not. So anyway, we may very well have some turbulence in front of us as we go forward here in October before we get this all straightened out. But the good news is we tend to have a rally into the end of the year in November and December. Obviously, that's not guaranteed. There's always exceptions to the rule. But in general, seasonality does benefit us towards the end of the year. So let's get through this month of October and hopefully keep a cool head about our shoulders. Keep in mind as well, David will be going on vacation here for a couple of weeks later on this month. And the inside joke here around market scholars is that whenever David goes on vacation, the stock market crashes. So let's brace ourselves for that possibility there as well. All kidding aside, we'll get through it regardless of what's in store. But just a reminder that going forward, we need to have the proper expectations. And if you got kind of blindsided by this move over the last month in the stock market, maybe a chart like this can help you set the proper expectations that 1% and 2% moves are perfectly normal. We need to have givebacks along the way in order to have healthy uptrends emerge after that. So nothing disastrous occurring at this moment. You did see that the VIX did drop a little bit today with the move higher in the market, and that tends to happen. We are now down to about 21 on the VIX as we speak. In terms of some of our heat maps and whatnot, let's take a look here at the S&P 500 heat map, and you can see it was a sea of green. Yesterday, of course, was the exact opposite. I was actually out of the pocket yesterday as my brother was in town visiting from out of state, so I was taking him and his wife on some hikes around the mountains here, and I was joking that my heat map out in the mountains was a bit more green than the heat map in the market, which was mostly red. Today is the exact opposite. You can see that we have a lot of green all over the place there. Netflix has been a star performer. Remember, we still have a bullish trade going on with Netflix right now. I do think it's going to expire here in the middle of October, but that one has at least worked out for us. It hasn't been easy, that's for sure. We've had our fair share of losing trades as well, but it is nice to see some of those winning trades come up and help us along a little bit there. And Netflix, our bullish trade there, was a positive performer there for us. So Netflix was up another 5% today, really breaking out to the upside. And then we also had NVIDIA making a 3.6% move to the upside. That's a huge company these days as well. Of course, they've been hit pretty hard recently within the technology pullback that we've seen. So this is a little bit perhaps of a dead cat bounce. We'll have to keep our eye on that situation, but Netflix is more of a breakout situation. So for those of you that are bold enough, maybe you take a peek at that one. So those are a couple of the big movers on the upside there. Obviously, Apple and Microsoft also moved up 1% and 2%. But in terms of the downside movers here today, we did see Merck give back a bit. Remember, they were in the news big time last week for some of their coronavirus medications, and so maybe a little bit of profit taking there on Merck today, down 1.8% in that particular case there. Then a few of the retailers out there look like they were in the red as well. Ross Stores and TJ X were down. Booking Holdings was down. Caesars Entertainment, the casino company, was down. And then Penn National Gaming was down, as well as VF Corp was down. That's a company that's a dividend aristocrat that we talk about quite a bit in my DGI classes. Over here, we have a concentration of red within real estate. Remember, real estate has had a tremendous year, but has been roughed up a bit more recently as a result of rising interest rates. And that was kind of a theme here today today as well, as a lot of those real estate companies, American Tower, that cell phone tower REIT to be precise, along with Crown Castle, both of those cell phone tower REIT companies down today. Equinix was down as well, over 3%. Even some of the healthcare REITs like Welltower and Ventas were down. So that seemed to be, if there was a concentration of red within the marketplace today, it looks like it resided within the REITs and some of the more mundane consumer staples and other areas. This was a bit more of a risk-on type of a day if you were to look at the green coming from the rest of the market. If we were now to take a look here at our index watch, let's go ahead and pop up the S&P 500 there as well. Get a sense of market breadth here today. And you can see that it was a pretty decent win for the bulls, 368 advancers to only 135 decliners within the S&P 500 today. So decent day. I'm not going to make too much of it, to be honest with you. I still think we've got a little bit of work to do before we get back into a legitimate uptrend. I think that these days are kind of par for the course. In other words, when we start breaking support levels to the downside, we should understand that these snapback rallies that look really promising on a one-day basis, where we're up 1%, if you were to kind of combine that with more intermediate term knowledge, is just part of that carving out of a downtrend with small pops in between. So if you were to look at this chart of the S&P 500 up here on chart 4B, for those of you that are premium members following along at home, I think you'd probably agree that we got work to do, right? This is, it's good to see a 1% up move, just like it was good to see it the other day, but that was followed with a 1% down move, and who's to say we don't get another one tomorrow? What we do know factually is that we still have a strongly bearish posture on the S&P 500. Remember, that's what that dark pink background color is suggesting, because that intermediate green line on the market forecast technical indicator remains in the lower reversal zone. It is rising, so it's at 16 and rising. Remember, the lower reversal zone ends at 20, so if it were to start getting some more constructive price behavior, we might very well see a little snapback posture. But until we get back above that moving average, I'm going to be a little bit less trustworthy of any bullish posture that might develop. Like over here, we had this snapback rally. We went back to a weekly bullish posture. We never did advance over that 30-day moving average. It used it as resistance and bounced down, and now we're back in the bearish posture again. So that's kind of what I'm thinking right now as the next 3-4 weeks unfold in front of us. And again, once we get into November and December, I'll then start probably giving the bulls more of the benefit of the doubt. But until then, they're going to have to kind of prove it to me. And right now, despite today's 1% up move, we're just not getting that conviction quite yet. So we'll keep our eye on it. But again, I want to stress that we closed well off of session highs here today. That's what that long upper shadow there on today's candle represents. Basically a sell-off into the close for the last 30 minutes or so. On some of the other indices, I mentioned in the intro that we did have one posture change to alert you to, and that was on the Dow Jones Industrial Average. Notice the background color of the Dow Jones Industrial Average is now light green, telling us that we have a weekly bullish posture. But again, I'll say the same thing that I mentioned just a moment ago with the S&P 500, which is I don't think I'm going to trust this bullish posture any more than I can throw it. In other words, it's very precarious at best. Notice the green line down below here. Technically, yes, it's rising, which is why the background color changed. But if you were to eyeball this green line day over day, that looks flat. And I'm not here to say that it couldn't emerge as a bullish move from this moment in time going forward. Obviously, if your time frame is long enough, you could be a buyer at any time. But what we care about is what's happening here in the next several weeks to couple of months. And right now, while the Dow may have a little bit more resilience than the S&P 500 because it's focused on big blue chip companies, we still have the same problem, which is we're trading below that falling 30-day moving average, which the last time it was tested, it was used as resistance and bounced down and away from it. So I have no reason to believe that won't be the case once again. Whereas in the past, it was a little bit more inclined to use the rising 30-day moving average as a support level and bounce up and off of it. So it seems like, that's been flipped on its head to a degree here. So, I'll take note of the fact that we now have a weekly bullish posture there on the Dow Jones. but I don't think I'm going to make too much of it. If it proves me otherwise, then great, we'll let it. That's why we try to stay flexible in our mindset as traders on a day-by-day basis, because things change. News stories affect the stock market, and that should affect your psychology around your trades there as well. So right now, Dow is looking better than some of the other indices out there, but still has that challenge of that falling 30-day moving average. By the way, the Dow was up 0.92% today. NASDAQ Composite was up 1.25% today, which was our leader on a one-day basis. But as I was mentioning to you last week, remember the NASDAQ has actually become our laggard here very quickly. Remember, there's more speculative, growth-oriented companies that make up the NASDAQ compared to some of these other indices. So that plays a role there. But we went from having a significant gap between price and 30-day moving average here when it put it its high on September 7th to the exact opposite. So we had a big air pocket here on the 7th from where it was trading way above its moving average and the moving average itself. Today we got kind of the opposite. We have this big air pocket from where we're trading today and this falling 30-day moving average here. So we could be in store for a bit of a punch higher on the NASDAQ, but same thing goes for what I mentioned the other indices, which is the assumption right now is that it'll fail at that falling 30-day moving average if it's able to pull that off. But without a doubt, that's a little bit of a stretched rubber band right there on the NASDAQ Composite. And when you have an index that's lagging the way that the NASDAQ is right now, when the overall markets are up, it's a larger dead cat bounce. There's more of a rubber band snap effect that takes place there. And you will see that the NASDAQ was our leader today, but does remain with the worst intermediate reading at only 12 at this moment in time compared to these others. The leader in this market is actually the last one on our list here today, which is the Russell 2000. Its intermediate line is at 51. It's falling, so it remains with that light pink background color, suggesting that we do have a weekly bearish posture, but just the position of 51 is markedly higher than what we see on any of the other three charts, and that should make sense. If you were just to eyeball all four of these charts right next to one another, which is why we look at them here on the foregrid, so you can do just that, you can see that there's a key difference on the Russell 2000 compared to the others, which is the Russell 2000 has a rising 30-day moving average right now. All the other charts have these red falling moving averages. So right now, it's yellow on the Russell 2000, the moving averages, because price is currently below a rising moving average. There's a little bit of conflict there, but in this case, conflict actually ends up being a leader compared to the lack of conflict on the others where price is below falling moving averages. So they're giving it the old college try there with the Russell 2000. But as I mentioned last week, part of that might simply be because the Russell 2000 didn't get ahead of its skis, so to speak, earlier this week. Or I'm sorry, not this week, but earlier this year. Remember, earlier this year, we had a lot of these other mega cap indices that were really roaring higher to new all-time highs, and Russell 2000 was just being left behind. So because they didn't go up as much during most of the summer, they didn't have as much to give back at the same time. So I think that plays a bit of an effect here as well. But it is true that the small caps are remaining a bit more resilient than the mega caps right here, right now. Russell 2000, by the way, was the day's worst performer, only up 0.49%. And again, think of that rubber band effect. We have a rubber band stretching on the NASDAQ, which had been our worst performer. So today's snapback is going to be a little bit more aggressive. The Russell 2000's rubber band is not really being stretched at all. It's still hanging out right there at the moving average. And therefore, when we have a snapback day like today, it's really not going to have a dramatic response because it didn't lose as much to begin with in the last couple of weeks. So, a little bit of a change here today when we look at our posture, where we do now have the Dow Jones Industrial Average with a weekly bullish posture. So be aware of that for the mega cap index. Let's now get into our three green arrows chart. That's chart 4D for those of you following along at home. And as it stands right now, we have one change to report here as well, and is often the case, it's the same change that I just mentioned a moment ago. Remember, these different chart setups have different technical indicators, but a lot of times they're trying to tell you some of the same things as to whether you have leaders or laggards. And what we're seeing here today is one little green shoot popping up right there in the Dow Jones Industrial Average. We do have a green arrow that emerged today on the stochastic, which is telling us that price is starting to close at a higher level within recent price ranges. And so we went from a red arrow yesterday to a green arrow today here on the the stochastic. The MACD and the 30-day moving average remain with red arrows, however, so that's why the background color of that chart is now white, telling us that we have a mix of green and red arrows, whereas if you look at the other three charts, they're still firmly in the pink background coloration, telling us that we still have 3 red arrows across the board on those other 3. All right, let's go ahead now and pop on over here to the internet. I always like to get a chance to say thank you to those of you that help support this project. Remember, David and I don't make any money off of doing these videos for you guys every day. We do it more for promotional purposes to get the word out about our business, where we do make money on our premium classes. But we don't make any money off of advertising or, promotional material from other companies or anything like that. So we do this purely on a volunteer basis. But as long as you guys get benefit out of hearing from us on a regular basis, we're willing to at least consider doing it for you as often as we can. The way that you encourage us to do that is by helping support us on social media, where that does get promoted a bit more, particularly on Twitter. I'm not on some of the other social media platforms quite as much. But Twitter, I am on there quite a bit, so I do kind of, keep a mental tally of sorts of how I'm doing there and whether you guys are getting value out of these videos or not, because, I don't want to be wasting your time, and hopefully you're not wasting mine either. These videos take about 3 hours out of our day to just give up. So we want to make sure that we're using our time wisely as business owners, and oftentimes I think we are, because you guys seem to get some benefit out of it. So if you want David and I to continue to do these videos for free on YouTube as often as possible, we ask one simple thing out of you. Click like for us there on Twitter. 109 of you did so last time I did the video on Thursday. Anytime we're up and over 100, I don't question it. I will make the video my priority. If we're below 100 likes, then I just kind of want to take a look at my schedule that day to see if I can fit it in or not. So I'll let you guys decide if you want us to continue these videos or not through your likes. Also, while we're over here, a reminder that earlier today, I taught my dividend growth investing class, as mentioned before, talked about the technology sector and some stocks that have really sold off there within the last month that might be setting up as interesting long-term investments. And then David taught his directional options strategies class. So those are available via recording to those of you that are Plus and Premium members. And then tomorrow I'll be teaching my factor-based swing trading class at 11 a.m. Eastern Time, and then David will be teaching options inventory trading at 2 p.m. Eastern Time. Also, while we're over here, let's check out our sector selector. If you're a premium member, you can find our various tools under the Tools tab here. And the sector selector does come out on Friday evening, so it is a little bit stale at this point here on a Tuesday afternoon. Nonetheless, gives us a generally a good idea as to any sort of sector rotation that might be taking place. Friendly reminder that these are on an equal weighted basis as opposed to kind of a more normal approach of market cap weighted that a lot of folks are used to. Gives us more pure results of where money is transitioning if we're kind of looking at it on an equal weighted basis, because we're able to look at some of the mid cap companies and whether they're receiving interest from the marketplace, just like we would want that information out of Apple and Netflix and the like. So anyway, as you can see here, we have a new king to report, and that king is energy. And you can see that on the rolling 3-month basis, this is the first time. Exactly 3 months ago, we were number 3 on energy before a big drop, spent a long time at the bottom, and then for the last month or so, energy has been just rocking it to the upside. And so they did overtake healthcare here this week as oil prices have remained resilient. There's still talk about inflation in the air, and it just seems like the market is willing to kind of jump into some of those oil and gas companies that have been beaten up in recent years as a place to kind of hide out here more recently. We also saw financials making a nice move higher here in recent weeks. This is the highest positioning for financials. They're ranked number 2, and previous to this week in the last 3 months, the highest that we saw for financials was a number 3 ranking back here at the end of August. So those two are somewhat new. We've kind of been led higher in this market by healthcare, real estate, and technology, and that has all been shaken up in a big way here in the last, let's call it, month or so. So we do have markets on the move as some of those areas are dropping off, like your healthcare and your information technology, and then we've got our energy and financials kind of picking up the slack on a relative basis. All right, let's go ahead and get back on track with some of our Thinkorswim charts, and let's take a look at some 12-grid analysis now, starting with chart 5A. So as these are pulling up, a reminder that the background colors of these 12-grid charts will turn either green or pink, depending upon whether the current posture is bullish or bearish. So as you can see, we do have green charts on the bottom rung here, along with Bitcoin. Bitcoin has been on a heck of a run here lately. In fact, this is a 3-month high that we closed at today. Bitcoin out of nowhere, up there above 50,000 again. It was just a week or so ago, it kind of looked like they were starting to slip below that moving average, but we had some rather remarkable turnaround here in Bitcoin. So a lot of those Bitcoin-related stocks like MicroStrategy and Mara and Riot and SI, those types of companies that tended to do a little bit better with Bitcoin, at the front of mind, have been starting to make moves here recently. So keep your eye on that breakout there on Bitcoin. Always a little bit more difficult to trade that one as stock investors, but obviously if you were a little bit more ambitious, you could do so through the futures market. Otherwise, some of you might have Coinbase accounts and other things like that where they do allow a little bit more easy access to cryptocurrencies. So Bitcoin breaking out to the upside. And then on the bottom rung here, here's where we got the US dollar and U.S. Treasury yields kind of in the lower left and the lower right that are kind of acting like one another. And remember, that can happen on occasion as international investors are looking to put their money somewhere in the world. If interest rates in the United States are rising, then foreign investors may choose to invest in the U.S. government securities where they can get a little bit more bang for their buck without taking a tremendous amount of risk. So, that seems to be the correlation we've seen more recently. If you do anticipate that interest rates will continue higher, then it might very well lead to also the U.S. dollar benefiting from that. Now, remember that when the dollar goes up, typically gold goes down, and that is what we saw today. The dollar was up 0.2%, gold was down 0.47%. However, notice that the background color of GLD is now light green, telling us that we have a weekly bullish posture. However, as you look at this kind of multi-month pattern that we're looking at here, I kind of see a bit more of a downward tilt towards the gold chart. Now remember, we actually have an iron condor going on right now in this presentation for gold, and I think we're going to be in good shape, but we'll have to keep our eye on it. If it were to go and close below this low on August 10th, then all of a sudden our trade could be in jeopardy, and it nearly did that here a few days ago, and we've had a nice little bounce up and off of that oversold cluster signal that I mentioned to you guys last week, and we've kind of maintained that strength. Now, just because we've done that doesn't mean that we have a posture change, or not a posture change, but a trend change. In this case, we're still below that falling 30-day moving average, so I'm not overly aggressive here. That would have been an opportunity to do maybe selling a bull put spread or something along those lines, but I don't think you get too aggressive here to the upside with long calls or anything along those lines until you see more stability in the chart. Oil has been a different story. Oil has been awesome to the upside. You can see day after day after day, we have upside activity there in oil, and that is what has led to that strength in the energy stocks that I mentioned a moment ago on the sector selector. This has been one of the go-to places as money has been transitioning. We've been talking about that in my top-down trend trading class recently. We looked at a commodity ETF. So that's one of the newer rules that we have in that Monday class, where we're not just looking at stocks, but we're also looking at some ETFs, and we've kind of recognized that transition taking place towards commodities. In fact, if you were to look at, let me see if I can remember what chart that is. It might be 5Q, the ratio charts. This might be of interest to some of you. Take a look at this chart all the way over on the left-hand side here. This is chart 5Q for those of you that are premium members following along at home. And notice this kind of turquoise chart in the middle rung off to the left. It says stocks divided by commodities. And when this chart goes down, as it is right now, that means that stocks are woefully underperforming commodities. There has been a major reversal. It looked like it was the opposite here on August 20th, and since topping out there, it has been straight down. So this has been a trend that has now been in place for over a month. Many of you have recognized it already and have been benefiting by that, but sometimes it can feel maybe a little uncomfortable perhaps to get into commodities, but right now appears to be one of those times where it is being favored. In fact, another way to kind of see that materialize is up here at the top. Notice we have another ratio chart called commodities divided by bonds, and here, because commodities is first, right, over here commodities was behind stocks, but here commodities is listed first, so the way that you would read this is commodities are dramatically outperforming bonds here. And it's kind of the same thing. Back here on August 20th, there was a monumental reversal for both commodities versus stocks and commodities versus bonds. On that day, commodities just started outperforming and have not looked back. It seems like it's only picking up steam here. So that has been very interesting to see that play out there as well. Let's take a quick peek here at our sectors. And sectors are going to be 5C for those of you following along at home. And as we're looking at this, you can see there is one chart that tends to stand out that is hitting 3-month highs here today. And of course, given what we've already discussed in this presentation, we should not be surprised to learn that indeed it is energy. In other words, oil and gas stocks are hitting 3-month highs right here, right now. They have absolutely erupted here just in about a couple of weeks, really since this remember when we were looking at the ratio charts a second ago on a commodity basis, this is a little different because these are commodity stocks, but remember on the ratio charts, the commodities themselves effectively bottomed on August 20th, so we shouldn't be surprised to learn that the energy stocks, oil and gas companies, also bottomed on August 20th, one day after putting in an oversold cluster signal. So that one was a very valuable signal for those of you that might have played a reversion to the mean type of a trade there, and it's just went straight to the upside ever since then. So energy stock, strongly bullish intermediate posture combined with an upward trending 30-day moving average at a time when the rest of the market is exactly the opposite. S&P 500, strongly bearish posture with a red falling 30-day moving average there. The only other sector that has a strongly bullish intermediate posture is the financials. Both of those areas were up today. The financials were up nearly 2% here today, which was an aggressive day. That was actually the best performer from a sector perspective. We were up 1.96% there on the financials. And then, again, mentioned before that the interest rate environment's really benefiting financials right now, where it's the opposite effect on utilities and REITs, which you see down in the lower right-hand corner, really struggling with strongly bearish postures. And you can see both of them lower today. Utilities down 0.25% and XLRE down 0.78%. So tide has changed there from an interest rate sensitivity perspective within the last month or so. Let's get into our trade application example now. And for that, I'm going to pull up our swing trading chart, which is chart 3A. And as this comes up here, I'll type in ticker symbol DVAX. This is a company that I must say I wasn't overly familiar with prior to today, but it happened to catch my eye as an interesting chart to perhaps highlight during this YouTube video here. I did notice, as mentioned in the intro, that they had an interesting news story here today. It says that Dynavax, and this was actually perhaps yesterday afternoon, but Dynavax said that the said Monday, so that was yesterday, that it secured an award of up to $22 million from the U.S. Defense Department to develop a recombinant plague vaccine with its CPG 1018. I don't know if that means anything to anybody, but point is the government apparently is in need of stockpiling plague vaccines. And after, of course, the crazy time that we've all had with the coronavirus, we can understand why preparedness might take a priority for different governments around the world going forward, whether it's with the coronavirus or something like the plague. So anyway, whether that turns into a meaningful part of their business or not is anybody's guess. But what I can say is that since that news story was released, this stock has acted quite well. Remember, yesterday was a big beatdown day for the general stock market, yet the day when they reported that news story, this stock actually closed a little bit higher yesterday, and then it followed through today. So it didn't give that back and do the opposite when the stock market went up. It continued to go up. So when the stock market was down, it finished higher. When the stock market was up the following day, which is today, it continued to go higher. And you can see that there were some changes on the chart as a result of the recent strength. We now have a blue background color, which suggests that we have a bullish near-term posture. Remember, that's a little different than the intermediate posture where we're using instead the blue line. And then we also have a green moving average once again. And remember, that comes to be when we have price above a rising 30-day moving average. And so you can see that we've caught a nice little bounce right at this rising moving average, just like we were able to do back in this time period and also back here. This is a stock that has not spent a lot of time below its moving average. It's done a good job using that as a support launch area. And hopefully for this bullish swing trade that I did earlier today, that will continue to be the case. Remember, the details have already been sent out to those of you that are premium members of Market Scholars. We send those out via Telegram to those of you that have access to our premium subscription. And then the rest of you that watch these free YouTube videos at night kind of get the information a little bit later as a result. But trade's already been done. You can kind of see here where I've got my bracket orders. So in other words, I'm trying to do a 1-for-1 reward risk relationship where I'm putting my stop loss a little bit below the candles here on October 1st, and my upside price target is up here just a little bit below $20 per share, which would slice us through a number of these previous candles that you see where this stock traded within the last month and a half or so. So it would not necessarily require a breakout above 2096 in this case. We just kind of need to get back into that general upper range of where it's traded. The last thing I'd mention about this is we do have a bit of a bullish near-term divergence here. Notice that we've got the blue line bottoming within the low reversal zone here on September 28th, and then we had the blue line come down and put in a higher low. Notice this second low is above the lower reversal zone. So this first one was into the green area of the lower reversal zone. The second follow-up one was in the white area in the middle. And so we have a higher low there on the near-term line at a time when the the price action up above was giving us more bearishness. So in other words, here was the candle associated with that first low, and here was the candle associated with the second low. So price went from here down to here, indicator went up from here up to here. So there was a conflict or a divergence that was taking place, and in this case might give us a bit of heads up that this stock wants to go higher despite having some struggles from a stock price perspective recently, probably because the whole stock market has struggled. So we'll just have to see where this one goes, but if we do have some stability in the stock market going forward, then maybe this is one that can bounce up and towards our target there. So that's what I had for you today. I hope you enjoyed the presentation. If you did, I ask one simple request out of you. It just takes 5 seconds out of your day. You can trade your 5 seconds for my 3 hours. It seems like a pretty good setup if you ask me. So if you could do me a favor and click like for me there on Twitter, that'll go a long way in to help ensure that we continue to do these videos for you going forward. So with that, I want to wish you all the best of success with your trades and your investments. Goodbye for now.